Now it's time to put those CEOs under the spotlight right now. I'm pleased to welcome onto the stage Dr. Luiz Fernando de Amaral, CEO of the Science-Based Targets Initiative. We also have Alberto de Paoli, Chief Financial Officer of the energy supplier Enel Group. Rolf Buch, Chief Executive of Germany's premier real estate company Vonovia. And our three guests will be interviewed by Amundi's Jean-Jacques Barbéris, Head of Institutional and Corporate Clients Division and ESG. Over to you, gentlemen.
Thank you very much, and good morning to everyone. So in the last panel, I think we just heard a call to action by some policymakers that were around. So the ambition of this panel is going to be focused on the actions that corporates are taking to align progressively their strategies with our climate ambitions, and therefore companies that we can invest in to manage portfolios in an aligned way. So to make the bridge with the previous panel, I would just like to have one first question for all of you. We've heard what the policymakers have called us to do. How do you think they can cooperate with you as corporates or as, I would say, non-governmental organizations to promote alignment? So maybe starting with you, Alberto.
Well, the cooperation is, I think, the most important thing that we have to achieve in these difficult years. I think corporations in the net zero path has the needs to show which technologies are available, because the transition is a technology mainly problem. So in a transparent way to show to regulators and authorities and governments what kind of technologies are available today to drive the transition, which technologies will deserve to have investments, because in the near future will help in first driving the transition faster, and then also to give messages to customers, not only to ask them to be good guys, but also to give solutions. And third, huge investments that we see in front of us, the way in which the best way to drive investments and to be helped by government and regulators, in a transparent way. I think transparency is the most important word along this crisis and along the net zero path.
Rolf, would you agree with this call to action to regulators?
Yes, I would agree, but they also have to be predictable. I think we should not change regulation. This is a long-term journey which we are going. For example, we as Vonovia, we have a commitment for CO2 neutrality by 2045. But this means that I have to decide now which of the buildings will be tackled in 22, in 23, in 24. So that's why I need predictability. So changing the rules in between this journey would be a disaster. And the second is we need regulators which hear us. I think we know better how we can get our industry CO2 neutral or social correctly. So that's why I think we have a debate, we have a discussion, and this has to be integrated in the regulation. So regulation made in parliament only, without talking to the industry, is probably misleading.
Thank you. On your side, Luiz, in a way, you're doing almost a job of policymaker by a way or another, by giving 1.5 degrees Celsius label to companies that are aligning their strategies. So how do you act with the regulators?
Thank you. Thank you so much. It's a pleasure. And, well, first, just need to say, absolute collaboration is key, right? With this challenge, nobody can solve it alone. You need everybody rowing in the same direction. I think my key point is that the oldest saying goes that measure is needed in order to manage, right? So clear standardization, measurable, comparable, transparent ways of defining success. This is what is absolutely important. Otherwise, we turn into a storytelling competition. And so those definition of those transparent, standardized and measurable KPIs is something that is absolutely important. And as you said, that's the role that we've been trying to achieve so far with lots of research, trying to identify what are the definitions of net zero, therefore we can measure progress towards that, and as a way to support this ecosystem, right? And those definitions need to be based on science as well, so which means not only what is plausible, but what is needed. What is the scientific world telling us what is needed? So that's actually our goal to get there. And so this is the first one. And then the second one is just market penetration. If we're going to get there, we need to get to the lion's share of the marketplace that is really going towards that direction and reaching this critical mass of companies and people doing it. Just to finalize, we have currently about 3,000 companies that have committed to setting science-based targets. That's roughly 1/3 of the global economy. Out of that, about 1,000 have already submitted those targets. So in some ways, we're reaching some tipping points, but we need to go much further and much beyond to really get to that point in which this is adopted by everyone.
Let's stay on that for 1 second, because as you're mentioning, it is key also for the investors that are within this room to have, I would say, aligned companies to invest in, to build in aligned portfolios. So how have you seen the evolutions from the SBTI perspective of corporates engaging into that journey, coming to you, and what are your assessment of the path? You just mentioned it briefly, and what would be maybe your advice to the ones that would like to jump in the pool but have not decided to do it yet?
Thank you. Yes, we as a standard setter, we also have a process on defining those standardizations and those guidances, right? So one thing that we did is last year we launched a standard for short-term objectives within the financial sector, which is already available, and we have some financial sectors, institutions that have been already validated against those goals. And at the beginning of this year, we launched a second process, which is the net zero standard for finance sector. And again, the first step is just a publication of what science is telling us. And then it goes through a consultation period that is going to define this long-term goal. So for the short-term goal, the standard is already there. It can be achieved, and we already have several financial institutions that have done that. And then we're defining what is the long-term goal, the 2050 goal, which is the net zero. So my recommendation is, well, you need to have three things. First, you need to have a very clear plan for the next 5 to 7 years. And you need to guarantee that you're delivering those reductions in line with those standards. Second thing, then you need to have a very good strategy for the next 15 years. So maybe you don't have all of the plan, but you have the strategy on how to get there. And the final goal is that on the 20 plus years, then you have to have a vision. Sometimes you might not know exactly how you're going to get there in 20 years' time, but as long as you have the plan for the 7 years, the strategy for the 15 years, and the vision for the 20 plus years, I think that's how we get us into that path.
So short-term objectives to be credible, a strategy for the 15 years, and a vision. Rolf, what are your objectives, strategy, and vision for the real estate sector in Germany, the way you see it?
So I completely agree, but on the same time, real estate is a very long term. So it's for me not sufficient only to have plans for the next 5 and 7 years. Actually, we as Vonovia, we have defined a plan for all our portfolio until 45. So we know exactly which building will be transformed in the year 43. So we are much more. So we are not only in the next 70 years, we know all the buildings which has to be transformed. So we know which kind of building will be transformed next year or this year, but this is broken down until to the end. I know that, of course, I cannot predict inflation. So there might be, because if you have a plan of the buildings, you need also where you get the cash from, right? So if you cannot only plan, so there might be some inflation impact, which I cannot predict because I don't know the inflation in the year 35. But there's, of course, and there I agree, there is a missing link because we have to assume that technology will improve also. For example, for solar panels, the assumption is fair that solar panels will produce more electricity in 15 years from now than they are doing today. So, but overall, we have a long-term plan, so I don't distinguish too much between short-term and long-term because this is real estate. And I think this is important because it's very easy, and I completely agree with the saying we are not telling stories here. A few years ago, sustainability was part of my PR apartment, and this is exactly what we should not do, because then you are getting nice stories and nice brochures, but you are not getting a plan. So if we are committing, and it's easy for a CEO to commit to a target to 45, because the probability that CEO is still responsible for this is close to 0. So that's why we have to get measurable targets year by year, because otherwise you cannot measure if the CEO is if the company is successful. So you have to publish it and you have to report it, and probably 1 year you will report better success and other years you will be a little bit behind, and then you have to show ways how to do it. It's like a long-term business plan. It's nothing else, and that's why we also, this is very important for us, we do not only have the plan, but we are actually integrating the CO2 targets and the social targets, which is very important for our company. We are integrating it in our SAP system. So they are following it like money. Because I cannot have a separate reporting system, because then actually I am running 2 SAP systems. So CO2 emission, social responsibility, the targets are measured like euros. And this is actually which will bring us also to the reporting, because there's a lot of reporting.
Thank you very much. And I think the yearly accountability that you mentioned is key, and that's one of the reasons why we're absolutely supportive at Amundi of having climate strategies presented every year, initially, and on the results as shareholder meetings. But moving to Enel, so your company has been extremely ambitious on its targets for a long time now. I think we've always been very appreciative of the efforts of that front. What would you say to maybe the colleagues you may have in the room that are still considering that engaging in such a strategy may be penalizing from a business perspective, because this is still what may hold some of them to really commit?
Well, I can give our experience and our results. I understand that it's a sector-based view, so it's our sector that is so at the center of the problem, because the energy production and the energy using is one of the main problem that we are facing. Well, we decided to change completely our business model into a sustainable one in 2015, after 3 years of decreasing EBITDA. And at the very beginning, we made it not for a specific sustainable choice, not to go in paradise, but for a specific business choice. Technology was so saying that producing energy with renewables will be cheaper and cheaper. And looking at the technology trend, it was clear in 2015. And also building big plants, say, sort against communities was not the good way to develop. So we will decide to develop together with communities and to find a way in which our plant will be a very relevant wealth for communities that will receive it. This is 2015. We said 2050 as net zero. This year we said 2040 zero, not net. We canceled the world net. So we want to be 0 2040. And as said before, so results since today is EBITDA from 15 billions to 19 billions, doubling market cap. Now our sustainable finance is 60% of our debt, so it's going increasing year by year. So these are results. And the very point I say to stress and to offer our experience is that it's a business choice. So what we are seeking is to have and to make profits and to make the company wealthy and long-standing through sustainability. We found in our sector, technologically speaking and business speaking, the way to do it. I don't know if it's simple, and I understand that in other sector will be difficult than this, but I think every sector can find this way to have a profitable business seeking for sustainability.
Thank you very much. But I think the financial sector is extremely demanding vis-à-vis corporates that are really the ones that are manufacturing the transition. We're only financing it. I think it's way much easier. But in a way, we need to be as well exemplary on our side on the financial sector. So, Luiz, you mentioned that recently SBTi has focused on what is an alignment for the financial sector entities. So can you elaborate a little bit on that as well? Because we have our part of the job to do on our side.
Thank you. Yes, so one of our objectives is we have our generic standards, and as we get into the idiosyncrasies of different sectors, then you start to develop the technical guidances for those sectors, right? And that's, as I mentioned, what we're doing with the finance sector. But you're absolutely right. The missions of the finance sector are not within their operations, or within the operations of their portfolio. So there are different, as you see on those standards, there are different ways of tackling that. From the very simplistic way, which is if your portfolio is fully aligned with 1.5 degree pathway, it means that you're by definition fully aligned with that 1.5 degree pathway. So the very first and easiest step is just what is the percentage of the portfolio, or what are the goals of the percentage of your portfolio of investments that do have the science-based targets. So that's really something that can be done right now, right? Then there are more sophisticated ways as they were embedded into the project, depending if you're on project finance or you're in different asset classes. Then have more sophisticated ways of calculating, for example, the temperature rating of that specific asset class. So all of that is defined on the short-term standard. And as I mentioned, goes from the very simple way, ready to be implemented, asking your people in your portfolio and investees if their SBTi analysis aligns, and if so, you're on the right path, from the more sophisticated ways in which you're actually calculating your own emissions within your own portfolio. So this is a little bit of the next steps, right? And you can start easy and get to the more complex and sophisticated ways forward. But again, the final message is, if your portfolio is aligned, you're aligned by definition because the emissions are in your portfolio.
Even if I think there is an interesting debate that we will not have the time to have, which is if you just do the picture and the snapshot of how much of your total portfolios are invested into SBTi companies, you're just taking the picture, but are you really doing something? That's another question. Maybe I would like to come for 1 second to the instruments that we can use as well to finance the transition. Alberto, you just mentioned that 60% of your debt now holding was in sustainability, if I'm not mistaken. Can you, I would say, share a little bit your experience regarding the issuance of sustainability-linked bonds? How do you approach that? How for you it was important to, I would say, issue such bonds? And what do you expect as well for the market participants vis-à-vis this type of instruments?
Well, when we invented the sustainable linked bond, was because so we were a full sustainable company. Our investments since 2015 were roughly 100% sustainable ones. And at that time, the only instruments available was the green bond instrument. That brings a philosophy that is good, because every instrument that drive investments towards sustainability are good. But philosophy was picking some project without having a clear view on how the company is driving its business into sustainability. You can invest in single project, not being a sustainable company. So, because finance is something that has to follow the business perspective of a company, we didn't find at that time an instrument available. So we decided to invent the sustainable linked bond, linked to target, a sustainable target. Clearly, you have to state clearly to the market why are you pursuing a sustainable target, as said before. Because if I want to go to paradise, so I can say I want to pursue it, or because I have some obligation. But I think it's better to say that if I follow this specific target, my company will be wealthy and will make profit in the future, will stay longer in the market. So this link is relevant, and the instrument is doing exactly this thing. So say, I'm giving you a target, I do think that I deserve a discount, because sustainable finance will have to be at discount on normal finance. Because if not, why do I have to do it? Why do I have to pay more to have a green label of my finance? So it's not meaningful at all, only to give you a green color. So I have to have and find reasons why I am going to issue sustainable finance on one side, and I'm offering investors a better company. That's why I'm saying targeting emission for me is clearly a way to say my company, if my company will reduce emission, will make more profit and will be less risky. That's the link. That's why I'm paying 25 basis points on penalty if I miss target. Not because I am a bad guy, but because I'm offering a different company in terms of profit and risk. We have to take sustainability, and to make sustainability speak the language, the financial language we all have. When we link these two things together, all the instruments will go ahead.
what just Rolf said, and counting CO2 emissions such as euros. But Rolf, you mentioned as well in one of the previous elements that you shared with us that you are trying to encompass as well the social dimension into your climate strategies. So you recently issued 2 social bonds on that front. Can you tell us a little bit how a company like yours is trying to encompass the social dimension within its climate strategy, and to tell us how you tackle this problem of the fair transition at a corporate level?
It has actually something to do with our business model. So we are, of course, responsible as a real estate industry for more of 40% of the CO2 emissions. But in the same time, we are actually responsible. Most of our tenants are spending more than 30% of their disposable income for the apartments. So if we don't fix the social element, very concrete, then we will generate an issue in society on the social front. So that's why we have these 2 challenges. And for us, the translation on the social responsibility is that the number of apartments which are affordable is an important KPI. And the second is because the demographic in Europe is changing, what kind of percentage of apartment is actually suitable for older people. So these are 2 big challenges we are facing on the society side. And you can be CO2 neutral, but if you have messed it up in the social environment, then you have not achieved anything. So that's why we also believe that the S is a very important element, especially in our business, and that's why we think we can also link a bond and financing instruments to achieving this. So I think this is a consequence of the business that Vonovia is not only a good company, is not a good company if we only achieve CO2 neutrality, but it's only a good company if we achieve CO2 neutrality while being also a social contributor to values of the society.
Thank you very much. Maybe before ending the panel, I would have one last question for each of you, because I think there's been a lot of debate regarding the fact that we are facing at the moment a crisis situation regarding the energy mix in Europe. What will be the energy mix without being dependent to Russia anymore in the future? And I think, would you say, or has it changed the situation, your long-term plans, or not, and why? Because I think this is a question that everybody has in mind, so I would be very happy to hear the corporate views on that front. Maybe Rolf, as you still have the mic.
Yeah, I think for us it's a shock. So we are first shocked about the war in Ukraine, and I think this is completely unacceptable. But in the end, we have to stop burning Russian gas, right, as fast as possible. And of course, also again, here the housing sector is a very important sector in this field. So for example, we are now working with the individuals, so with our tenants, what they can do to reduce it. Because of course, we have taken the decision last week to reduce the temperature of the heating systems. Which will be tough, because so now nobody can have a room temperature of 24 or 25 degrees. So, but in the end, it is the tenant who has to save. Meaning you have to close the window if the heating system is on, so very practical things. And we have to explain them and to teach them how to use the technology which we are providing in a better way. And this is a challenge. And the problem is we have to do it now faster than we thought. And it's learning by doing at the moment. So we are not there yet.
Alberto, have you changed your plans in the current context?
Let's divide the answer in 2. One is the very short period, and then the medium and long term. So on the short period, let's say, first of all, we don't buy any gas from Russia since the beginning, so it's not a problem to change our sources, but to be a service of community for sure. So we are ready to do everything to pass the next winter if so crisis will last. And on the other side, staying closer to customers, having and giving them fixed price. Our customer base didn't suffer an increase in price along the crisis because we produce our energy, so we are giving to our customer fixed price on energy, keeping them safe on this price crazy crisis. On the medium and long term, I think is only reinforcing our position, because we are adding another world. There is so the independence of energy. There is the same word of sustainability. It's exactly the same thing. We are pursuing a full electrification of consumption produced by renewable sources. This is our purpose. And this is exactly in line with the try to have a full independency. On one side, I say, we have only to do something. So, Repower EU is an important tool. But the very problem is not to create new dependencies in the new era, instead of the dependencies we are having on the fossil fuels. So it's now the time to restructure industry and reshoring all the technology that will be the base of the transition. Because in other side, like so in the very short term now, we are getting out the dependency of Russia, but we are creating new dependencies on other countries. So energy transition will have the main path not to create new dependencies in different technologies of different raw materials.
Thank you very much. So I hear that even the crisis, as difficult as it could be, can always also be an opportunity to transition even faster. So we had one ambition in this panel, which was to demonstrate that it was possible to act and to act now. We hope we have convinced you by one way or another. So thank you very much for your attention, and a round of applause for our panelists, please.
Thank you very much. It's now time to turn to our Amundi experts. I'd like to welcome Matteo Germano, Amaury and Elodie Laugel to hear about the consequences of the energy transition for investors. Welcome to you, Matteo Germano, Deputy Group CIO. We also have Amaury, Head of Fixed Income. You've switched the chairs during the repetition, trying to trick me up there. And Elodie Laugel, Chief Responsible Investment Officer. Let's dive right in with the first question for Matteo. The energy transition is a journey that will have profound implications on the future long-term economic outlook. Can you walk us through the main long-term themes of the transition?
So the four main macro implications. Debt. Debt ballooning is likely to be one of the legacy of the energy transition. Government will initially have to intervene with target taxation to push up the price of the less green energy sources, but then a lot of funding will be required in order to implement the great transformation through infrastructure project and electrification. Second is going to be about inflation. We are expecting a super cycle for commodities. It's already started from some of the less green, but then there will be also a scarcity effect on some of the metals that are really necessary for the big electrification. The third element is going to be about, very important for the bond investor, is going to be about a green quantitative easing. Central bank, again, will be central to fund some of these big project, but also to maintain the cost of credit under control, and very importantly, avoiding fragmentation, especially in Europe. Finally, the fourth one, and very quickly, is that there's going to be opportunity for us as investors, as the energy transition will impact differently regions depending really the energy mix and the future paths. And to sum up, at the end for us, it means a less friendly sort of market environment, because at the end, earning per share will be lower in terms of expected growth, given that part of the cost will have to be borne by, obviously, by the enterprise.
Now, Amaury, staying with the green QE topic that Matteo mentioned, and more generally to energy transition themes, what do you see as the main implications for bond investors?
Well, clearly the support of central banks through green quantitative easing will have strong effects on markets. So for bond investor, there are many implications. First, the bond investor is now a key partner to the energy transition. Second, the green premium will be supported by green QE and demand from investors, but it is important as well to understand that will be capped by our fiduciary duties. Third, today, investing in green bonds is creating some sector bias and geographical bias. For instance, higher exposures to euro issuers by around 44% versus an aggregate benchmark, and conversely, lower exposures to dollar, CNY, and yen. And higher exposures to corporate, and within the corporate world, key sectors are utilities, banking, and real estates. However, these sector bias tend to diminish year after year as the green bond market is booming. It's becoming increasingly diversified. And even 2 weeks ago, we had France issuing a first inflation-linked green bond for 4 billion and bringing the total amount of green bonds for OETs to 50 billion. And finally, there are other ways to finance the energy transition, like sustainability-linked bonds and social bonds, and all of them represent now 40% of the ESG bond universe. And with these additional tools, there will be less and less sector biases.
Various tools available. Elodie, imagine I'm an investor who wants to adopt a net zero trajectory. What are the pitfalls that I need to avoid?
When we adopt a net zero, I would say strategy or trajectory, I would stress 2 items, I would say, that are very relative to the objective in itself. First, this net zero objective to be achieved by 2050 is a collective objective. A company cannot be net zero on itself. A portfolio cannot be net zero on its own. So the point is not to avoid biggest emitters. I would say it won't solve the issue in the time frame that we have, but really to have them to transform. Should they be on the side of the emitting energy production or demand? So obviously, when applying a net zero trajectory and strategy on your portfolio, you set target for sure in terms of carbon emission reduction over different time horizon. But my point is to say that what is absolutely key as well is to put in place an ambitious plan in terms of engagement strategy, meaning the dialogue with your shareholder, to really push and support corporate company in this transition effort. The second item that is also important to have in mind is that, as it has been a little bit said in the previous conversation, is that it's a forward-looking objective. As of today, if you look at the economy in developed market, it's according to, and if you use the EU taxonomy, I mean 4% of the economy is green. If you, obviously, you have some corporate company taken some commitments. There are 25% in developed markets today that have a statement and declaration aligned with the 1.5 degree trajectory. It was 12 last year, so there is a momentum. So all the point is to say, really to get rid of, I would say, or step back on what is the word today, but really having a forward-looking perspective. And therefore, the crux of the challenge is to find the best predictors in terms of future emission. In a world where actually, so statement could be overstated, where the past behavior is not an indication of the future, and most of the technology are still unknown. So investment in research is quite important.
And just following up, how can asset managers engage with corporates to set this journey in motion?
But to make it very concrete, the first thing that we are asking actually that corporate companies submit to shareholder what are their climate strategy through the General Assembly.
The strategy first.
To be aware of this strategy. As Matteo mentioned, I mean, the climate change will have significant impact on the corporate company, as well as when you have to put in place a strategy to mitigate it, it's significant transformation in your business model and the way you operate. And therefore, it's important that this strategy is brought to the attention of shareholders, that a dialogue can take place, and that finally an alignment is reached so that the company can move forward. And as a responsible investor, it's also a way to evaluate this strategy, to evaluate if actually it's consistent with this net zero 2050 objective and what is at stake. And here, for us, what is really important is to look at different important items. Obviously, the target for scope 1, 2, 3 over a short, medium, and long-term horizon, but also what is the means that are deployed to achieve it, so the investment plan over 3 and 5 years horizon, in particular the green capex of the company, as well as the existence of an incentive plan, so namely, I would say, indexation of the remuneration of the CEO to this strategy. And once you have that, as a responsible investors, you can assess if it's sufficient or not to reach this objective. If the strategy claims for improvement, then you engage with clear target year after year on how it should be improved to fill the gap. And if engagement fail, then you can take measure more constraining up to the use of your vote, to state that you are not supporting the strategy. Ultimately, engagement strategy requires continuity and persistency over time from shareholder. It's absolutely necessary and critical because it's a long-term journey, but as well very short-term year after year target and escalation process. It's huge effort, but it's worthwhile because it's really a powerful mean for investors to have an impact on the real economy.
Very clear outline there. I'm just going to close this session now with a question for Matteo. All in all, what are the main investment implications of a net zero path?
Multiple implications. The first one is at the overall asset allocation level. Inflation is going to be here to stay, so it means that we need to adopt a mindset of real return. Second is that ESG flows will impact returns. And again, in the medium term, given that we're looking medium long term, emerging market and Asia will be favored versus developed. The third element, and the most important, is that inflation, as we've heard, is becoming multifaceted, really much more complex than just demand-driven. Food inflation coming from climate events, energy inflation coming from transition, we have green inflation coming from scarcity on some of the metals. So it's becoming important the way you build the portfolio. That's why we have introduced as a concept this inflation parity, because the portfolio has to be designed that in all its levels, from sector to asset allocation to stock selection, has to be designed in order to be resilient, to peak in inflation and highly correlated to the different sources. That's what has been covered for the colleagues who joined in the workshop yesterday. So it's going to be not only at the high level, but also stock selection, really investing in companies that have a strong purchasing power and are able to transmit to the final client. And to close, we are expecting eventually much more exposure to real asset to come. Infrastructure and real estate likely winner in this for the next decade.
That brings us to the end of our session here on the energy transition here at the Amundi World Investment Forum. Thank you to all.
Thank you.
Thank you.